Well, howdy there, folks. Hope everybody's doing absolutely phenomenal. Hope everybody had a great weekend. A lot to get through in today's video. We've got to speak about the tweet that shook up the entire bond market and stock market. Literally within seconds of this tweet being sent, it completely shifted the bond market and the stock market. Here today, we've got to talk about some new developments in regards to Tesla and Elon Musk in the past few hours, in which the government's coming, let's call it, they're coming after Elon Musk and Tesla much harder, and this is just a big shift that has kind of developed over the past few hours that I want to share with you guys in today's video and kind of, tell you what I think of this whole situation, okay? We've got to speak about some opportunities in this market. Obviously, the next few days are massive for the stock market in general. We have some of the biggest companies in the world reporting over the next 72 hours. I'll talk about my feelings in regards to that, some opportunities I see out there, and a whole bunch more. So, action-packed video. Appreciate everybody joining me as always. Thank you so much for being subscribed. And, I was somebody that said, they thought I was a little tired today on my Twitch live stream. And I might be, because I was up till like 3 a.m. filming this new workshop for you guys. It goes all into the income statement, breaks everything down as simple as possible. So if you ever have trouble understanding income statements, you don't know them like on the highest level, check that out. It's pinned comment. I was up till like 3 a.m. last night filming that beast for you guys and preparing it and everything. So pinned comment, it's absolutely free if you want access to that. It was a late night. Alrighty guys, so we're actually want to start today's video just kind of showing you guys where the market's at so far this year. The Nasdaq's up over 24 percentage points this year. The S&P 500 is up about 10%, and the Dow's actually negative for the year overall. It is red for the Dow Jones Industrial Average, right? Which I would say I've never seen this type of divergence before, but honestly, last year we saw this sort of divergence, right? Where the Dow did so much better than the Nasdaq. It was absolutely shocking, right? And this year it's just a complete shift. It's just the Nasdaq's doing so well, right? And if you look at what happened today, right? Today is going to basically tell you this is the same exact playbook that's been played the whole year. The biggest of the big dog companies, green here today, and Red Dead Redemption out there past that. And a heat map is the best to illustrate that, right? If you're listening to this video and you're not looking at the screen, look at the screen for just a moment here and look at that, okay? The biggest big dog companies are green and everything else is Red Dead Redemption out there, right? Now, check this out. So it would look like it was going to be a bad day for the stock market here today. It looked like treasuries are going to be, going much higher. It looked like the Nasdaq was going to have a tough one. It looked like a lot of stocks were going to be red. And then a tweet was sent, and within literally 60 seconds of that tweet being sent, the stock market boomed and treasuries fell and fell and fell. Okay, what is the one tweet? This is the tweet that was sent. Right here. Bill Ackman sent this. Bill Ackman, huge name in the stock market, huge name in finance, okay? Bill Ackman says, we covered our bond short. Now, if you don't know what that means, it's basically a bet that Treasury, if you're going to short bonds, essentially, it's basically a bet that Treasury yields are going to keep going up and up and up. So saying that he covered his bond short basically is him kind of saying he's not so confident that Treasury yields are going to continue to go higher from this point. And there's a potential that Treasuries have topped now at this point in time, okay? Now, that's a huge, huge statement. And literally within a minute of this tweet going out, Treasuries started to fall across the board. Pretty much every single Treasury out there fell and fell and fell. This is a 10-year I got in front of you, and it just dropped off a cliff. Literally, he sent that tweet, and Treasuries dropped off a flippin' flapjacking cliff, okay? Now, I know there's going to be somebody that says, is that right? Isn't that market manipulation? How can he just send a tweet and it shifts the whole treasury market, it shifts the whole bond market, it shifts the whole stock market? Because then after that, stocks were straight up, right? Well, I'll tell you this, what's illegal about it? There's nothing. The fact that the algorithms and people in general want to make a decision based upon if they want to own treasuries or don't want to own treasuries or want to own stocks or don't want to own stocks based upon what Bill Ackman tweets. Like, there's nothing illegal about that. There's nothing bad about that. It is what it is. The fact is, I don't know if they should be giving Bill Ackman that much credit in terms of his beliefs and those sorts of things, because Bill Ackman, he's been right on many things in the market over time. He's been wrong about plenty of things in the market over time. But the fact that the market wants to completely move based upon his tweet is, in my opinion, a little ridiculous, but it is what it is. That's the market we're dealing with. And we really had no narrative going into today, right? The Middle East wasn't that crazy over the weekend in terms of some sort of huge escalation. In terms of earnings, we didn't really have those earnings today. It's really Tuesday, Wednesday, Thursday that you got all the big earnings. So the market didn't really have a narrative to go off of. So Bill Ackman sends that tweet out there, right? And all of a sudden, boom, we got a narrative to run the market now. Treasuries are going down, stocks are going higher. Man, what a change it was. What an absolutely change it was, right? And that was the only thing he tweeted, by the way. We'll cover one other thing that I thought was important to take a look at, right? And you look at Tesla stock here today, right? And we're going to talk in depth about Tesla and Elon Musk and that whole situation a little later on, but I just wanted to illustrate to your guys' attention. Do you know what Tesla stock price hit this morning? Do you know what it hit this morning? If you were up early this morning, you know what Tesla stock hit. If you don't, you might not. Tesla stock hit $202 within the first several minutes of trading, essentially. I mean, it is a possibility that if Bill Ackman does not send that tweet, it is a realistic possibility that Tesla could have touched under $200 a share here today. It could have been $199, $198, something like that today. Being that it opened, at 202 or, shortly after the open, it was 202. Like, my gosh, right? But what a shift. You look at PayPal, another new low for this stock was hit this morning. It opened at, or let's call it in the first bit of trading, it was in the $52 range. 52 flip and flapjack and dollar range, which, by the way, I'm in shock that the stock hit 52 today. But I've been in shock that this stock even went under 75 and then when it went under 60, right? No different than Meta last year. I was in shock when it went under 150. I was just in bigger shock when it went under 100. And in regards to PayPal, like at this point in time, I'm just in shock in regards to stock. Like to see it down at these levels is just, I think it's silly, but as somebody that's buying the stock very heavily and plans to continue to the end of the year, I'll take every cheap share they give me. It's almost laughable, right? Look at TLT. TLT bounced back with a nice day for TLT, that is. 1.2% up. This is the iShares 20-plus year Treasury bond ETF. And this is what a lot of people have been getting in and playing. Because TLT is the lowest it's been in a long, long time. A lot of people believe TLT is going to come bouncing back hard. And so, a lot of people have been wanting to buy TLT or have been purchasing it, right? And I don't know if you guys know how deep this goes in regards to option contracts, in regards to TLT and everything that's going on there. So look at this, for instance, right? Investors flock to TLTW, a turbocharged version of TLT. A turbocharged version of the year's most popular bond ETF is in high demand. The iShares 20-plus year Treasury bond buy rate strategy ETF, TLTW, has registered inflows of $731 million so far in 2023. That's a big number, folks, for some random little whatever we want to call it here, okay, play on basically the TLT. Quite a sum for a fund that was launched just over a year ago. Yeah. TLTW, which currently has $650 million in assets under management, AUM, combines a position in iShares 20-plus year Treasury bond ETF, TLT, with a covered call writing strategy. Now, when I first saw this, okay, and I was like, oh, it's a turbocharged version of the TLT, I was thinking, if they really wanted to turbocharge it, you buy some leaps. Buy some leaps on TLT, like buy something even out 6 months or a year or something like that. And some call options, like covered calls is almost a way of a little bit de-risking your overall asset strategy. So I don't know. I saw that and I actually thought they could, if they really want to turbocharge it, start buying straight up call options. Then you really talk about turbocharging your losses or gains, right? TLT is, of course, the wildly popular ETF investors can't get enough of. It has picked up $17.8 billion of inflows this year. By the way, this was as of last week. The number, I'm sure, is even bigger now. This year for a long-bound rebound. The rebound hasn't yet materialized. In fact, the fund has been down about 10% this year. TLTW has fared far better. It's only down 2.6% thanks to the income of writing calls, right? Which once again goes back to, I almost feel like TLTW might be a safer way of playing TLT. I don't know, man. Just my opinion on that. If they really wanted to supercharge it, like start buying out of the money calls, then you'll supercharge your loss or gains, okay? Guys, this is absolutely insane what is going on in the option market in regards to TLT. People are so convinced that TLT is going to go up that they are buying call options like it's nobody's business. And I'm talking about options that expire this week, options that expire this month, options that expire this year, and everything in between, okay? The amount of volume going through on call options on TLT is, to be quite frank, it's pure insanity, but it's what we have going on. And even on myself, I look at TLT and I'm like, yeah, maybe it is bottoming here. My baby baby alert, baby's out. And so even myself, I've been considering like TLT's probably got to be close to a bottom, right? But I'm kind of like second guessing that whole situation. I have no play on TLT, short, long, anything. But I'm kind of second guessing it a little bit, folks. And the reason being is I get a little scared when everybody's convinced of something. And so it seems like everybody and their grandma's convinced that TLT is going to come rebounding back. There's going to be big gains ahead. And I just get worried when everybody seems to think the same exact thing, right? I usually like it when it's more of a divided situation. I loved buying Meta last year when everybody said Meta's done, their best days are behind it, it's going to $50. I loved it when I was buying Tesla at the beginning of this year and everybody was convinced that Tesla was going to $50 to $60, right? And then it went on to go to $250 plus. I love when, there's a lot of people that are kind of like, no, I'm not convinced of that. I think it's going lower. I think it's, a worse situation. PayPal is a good example. I like there's a very divided, kind of amount of folks out there in regards to PayPal. It actually makes me feel more comfortable, right? I can't find anybody that's really bearish on TLT. It seems like everybody wants to play TLT for upside. And so that's something that I'm like, usually when everybody wants to do something, I'm like, maybe that thing doesn't happen, right? Maybe, just maybe it doesn't happen. No, that wasn't the only tweet that Bill Ackman sent. He also said this, which I thought was very important. Bill Ackman said he thinks that, quote, the economy is slowing faster than recent data suggests. So Bill Ackman thinks the economy is getting worse, which kind of goes back to the whole covering a short position on bonds, because the thought process, if the economy is getting weaker, then the Fed's likely closer to starting to cut rates. If the Fed starts cutting rates, likely treasuries go down, right? So I understand that. No, what I think is, I think we have a divergence in the economy. And this is something I called out was going to happen, well over a year ago, right? Where basically we have high ticket is doing horrible. Home sales, look at the data around that. Autos, listen to the Tesla conference call. You'll have all the context around autos you really want to get. Furniture sales are not good. Listen to RH when they report. They'll probably report earnings, I think, in December, beginning of December. Listen to those earnings from RH. You hear a lot of companies pulling back on CapEx this year, right? So high ticket stuff is not in a good place. Low ticket is a complete flip side. Restaurants are doing just fine. Every time I go to restaurants, man, they're packed, especially all the good ones, right? Name brand food, look at Pepsi's earnings. If you were in a really bad economy, you'd actually see a lot of people pulling away from name brand items and actually buying off brands. Pepsi's earnings were absolutely ridiculously great. One of the best earnings so far I've seen this earnings season, right? You look at games, concerts, anything like that, booming. Hotels, cruises, booming. Maybe not the stocks are booming, but in terms of the actual business underlying, booming, right? We have a divergence. And let me show you this divergence for you right in front of you with two headlines from today. Check this out, okay? This shows you the divergence. Goldman Sachs sees 2024 housing starts to fall to the lowest in 30 years. Will Goldman Sachs be right in that prediction? My opinion is they probably will be. They probably will be. Housing starts are going to be likely horrible in 2024, and especially if interest rates keep up here, right? I mean, at the end of the day, these 8% mortgage rates are not going to be good for the home builders. Like the home builders have been able to kind of stem it off a bit. I don't see that continuing. I think it's going to be Red Dead Redemption out there for home sales, new home sales in the fall time and in the winter time. I think it's going to be some of the worst they've ever seen, to be quite frank, for the home builders overall. That is my personal belief in regards to that. Obviously, I have a bet that that's going to be correct, right? These are put options on Toll Brothers. They expire in January 2025. So far, they're printing a lot of money. That's a pretty darn good gain in such a short amount of time. I believe they're going to print a lot more money. And so I have no interest. So that's a headline, right? Goldman Sachs sees 2024 housing starts to fall at the lowest in 30 years. High ticket, not good. On the flip side, the Taylor Swift movie, which is a concert, it's basically a movie about her concert. This is shocking, okay? It just brought in another $33 million in the second weekend this thing has been out. It's literally just a movie about a concert. Like, what are we talking about here, okay? And it's bringing in silly money. And so people clearly have $15 to go to the movies, $20, $25. They clearly have plenty of money. Every time I tried to go to Dutch Bros this weekend, and I was going to get my wife and myself something, and I was about to turn in there, and I saw the line, and I said, oh, hell no. I'm not about to spend 45 minutes in line waiting for coffee. And I drove off. I was like, forget that crap, okay? The bottom line is all those sort of stuff, the low ticket stuff, is booming. It's booming, man. Like I don't see any weakness from what I see out there in low ticket. It's really high ticket is where I see all the major weakness. And so that gets into the Bill Ackman thing about Well, where do you see the weakness in the economy? Because we have a very divergent economy. It's a whole, it's a very different economy than even we saw 12 to 18 months ago. It's shifting fast, and it's been a little bit of a roller coaster ride. And I believe actually we're coming out of the goods recession, which is very interesting, right? Now, we got to talk about Elon Musk. We got to talk about this Tesla situation, this developing situation that's not good. You guys know my opinion, if you've been watching the channel for a while, on Elon Musk buying out Twitter, okay, in that whole situation. What did I tell you? I said, this is going to be a problem. This is going to be a problem for Elon Musk. This is going to be a problem for Tesla. And the reason I believed that was I know Twitter's history. And I know Elon Musk has been getting into it and wants to get into it with a lot of politicians. And so naturally, you buy out Twitter. You try to shift narratives of Twitter. You try to change a lot of things, and you start going to battle with different, very powerful people. You're going to start to make a lot of enemies. Okay? And these enemies are starting to slowly come after Elon Musk, and they're going to do so by coming after Tesla. Okay? Because how can you get to Elon Musk? We'll go after his biggest cash cow, which is Tesla. Right? We know SpaceX is basically, a non-existent revenue generator right now. It might be huge long term, but in terms of right now. So you go after the cash cow. So here's what's going on now at this point in time. Okay, this is getting serious. Tesla says the Justice Department is expanding investigations into issuing subpoenas for information. Federal prosecutors have expanded investigations into Tesla beyond the electric vehicle maker's partially automated driving systems. And they have now issued subpoenas for information instead of simply requesting it. The company disclosed on Monday, okay? A subpoena is a much more serious legal matter when it comes to the government. When they start, because the government can ask for information, things like that. A subpoena is a whole different situation, okay? That's like the most serious kind of situation that you could kind of face as an actual subpoena, okay? Federal prosecutors have expanded investigations into Tesla beyond the electric vehicle maker's partially automated driving systems, and they have issued subpoenas for information instead of simply requesting it. The company disclosed on Monday. In a quarterly report filed with Securities and Exchange Commission, Tesla said the Department of Justice is looking into, and subpoenas usually have to go through the court system, okay? Tesla said the Department of Justice is looking into, quote, personal benefits, related parties, vehicle range, and other personal decisions without giving details. That sounds like a whole lot of a lot there, okay? There's a lot of subpoenas on a lot. That's all I'm going to say to you, okay? Ask any lawyer, that's a lot of subpoenas on a lot there, okay? The additional investigation topics and the subpoenas suggest that prosecutors have broadened their inquiry and they have found the need to force Tesla to disclose information, legal experts say. The filing indicates prosecutors may be investigating Tesla CEO Elon Musk and whether the company has been candid in describing the features of its vehicles, they say, right? Which could go into, let's say Tesla said this car gets a range of 250. And let's say the car only gets a range of 200 miles or 175 or different numbers, okay? Oh gosh, that's a whole situation. You got to think, oh man, what could that do to Tesla? Like let's say Tesla was found that they were fudging. Let's just say hypothetically, let's say they were found that they were fudging the amount of miles a car could go, right? Instead of 250 is really only 175. Let's just say that. What does that mean for Tesla overall? Well, this could be a very serious matter. One is that could mean fines and all those sorts of things. Two, if the government found stuff there, if they actually found stuff, and they could prove it, they could actually force the company to maybe do recalls, to maybe issue new vehicles, new batteries, all types of crazy stuff, okay? Which would be ridiculously costly. If any of these subpoenas come out to they found something and they could prove it and things like that, okay? And so just keep in the back of your mind, this is one of those scary things of like, wow, this could cost a fortune if anything actually happened there, right? Now, Jacob Frankel, a former SEC enforcement attorney and ex-federal prosecutor, said specifically pointing out, quote, personal benefits in related parties, end quote, suggest a possible connection to Musk. Disclosing the vehicle ranges under scrutiny also reflects a concern about the company's representation about vehicle features, which is very interesting, right? So Yeah, it sounds like they're going more wide range, okay, in regards to going after Musk, in regards to going after Tesla and the cash cow that is Tesla, right? Now, the good news is we are talking about Elon Musk is the richest person in the world, okay? And so likely he should have the best law firms, and the best lawyers out there, and he should have those for Tesla as well. So if there is any sort of situations, the legal team at Tesla should be a higher level than what the government has. Should be. It's not a promise or it's not a guarantee, but they should be, okay? So I think it's going to be a tough legal battle, but it is scary. There's no doubt about it. It's scary when you hear some of the things they're looking into there, and I don't know, man. It is something definitely be concerned with and definitely think about. Okay, definitely think about. So this kind of gets into, right, this whole short-term crap time we are in regards to Tesla stock, right? Which Tesla stock's down about 16.5% just in the past 5 trading days, which is a huge number in 5 trading days. The government's after Tesla now, and once again, they're not really out after Tesla to be after Tesla, in my opinion. They're really after Elon Musk. But how you get to Elon Musk is you go through Tesla. So that's just my opinion on that. I don't know, okay? All that matters is government's after Tesla, okay? The margins are still likely 2 to 4 quarters away from bottoming. I feel like we're probably about 2 quarters away from margins bottoming. I think we probably got another rough one this quarter, another rough one the following quarter. I think 2Q, we could actually see a margin pickup, or at the latest Q3, but a lot of people aren't convinced we're going to see a margin pickup till like Q4 of next year, if not 2025, okay? A lot of people have very wide-ranging opinions, but the bottom line is margins haven't bottomed yet, likely, and there's still to bottom, okay? The third thing is the very important thing that Elon Musk said on that conference call, okay? And Elon Musk basically illustrated us that Cybertruck hell is about to be here, okay? Where they're going to ramp this vehicle, and they're going to have a lot of problems, and they're going to have a lot of trials and tribulations and a lot of situations in regards to Cybertruck, right? Which could also weigh on margins and profitability of the company in a major way, as well as management's attention and time, right? So that's coming here, right? Also, we're dealing with interest rates that basically the highest we've seen in a couple decades now at this point in time, right? So when you've got all that to deal with, basically the kitchen sink is being thrown at Tesla in the short term. I'll just be honest. When you've got all that crap, this is all serious stuff to deal with. I mean, very serious stuff. Highest interest rates in 20 years. You've got this ramp of a brand new, fundamentally different vehicle. It's going to be, it's going to be not smooth for the next several months, if not several quarters. You've got margins that still haven't bottomed, and they've just been, plummeting down. You have the government after this company. It's a kitchen sinks being thrown at Tesla right now. A kitchen flipping flapjack and sink, right? And so that's what we're dealing with in the short term, and that's what's going to continue to weigh on the stock in the short term, right? Things are pretty promising for Tesla over the long term, and I think as 2024 goes along, I do believe that these negatives are going to slowly start to abate and slowly start to be kind of shredded apart one by one as 2024 rolls along, but it's a process to work through. And the bottom line is, we're just not done yet. We're a lot of those are going to be ongoing issues in 2024, and they're not going away, okay? Now, if you want some good news, commodity index was down here today, 1.29%. And in regards to commodities, in the past year, commodities basically haven't done anything. This is a past year for GSG, which is commodity index. You should all track it on your watch list. It's up 0.64% in the past year, okay? Now, there has been a spike up in commodities recently, and that's because of the price of oil, but this matters significantly because if you're thinking about where does inflation go in 2024, we need to continue to see GSG in a tight spot. And I don't think this gets enough talk, guys. I don't think it gets enough talk from the Federal Reserve or from market participants or anybody, to be quite frank. GSG went from $8 to $25 in a little over 2 years, right? And that super cycle in commodities from those ridiculously low levels of March and April of 2020 through the second half of 2022, that ridiculous level is what was a huge component of our inflation. What is everything made out of? What is like people act like they just I don't get how the inflation came, right? What is our whole world run on? Commodities. And if you're going to talk about commodities, triple in price, right? In a matter of 2.5 years or less than 2.5 years, a triple in price, you're going to have massive inflation because all those commodities go into building a home, building a car, shipping product around the world, right? The food you have to eat, that's all commodities. The whole world's run on commodities. So I don't think the Federal Reserve has taken that enough serious, in my opinion. They just kind of look at the end result. And I'm like, it's the commodities that really spiked us up. But part of that was because commodities spiked so low. Commodities should have never went as low as they went in March and April of 2020, but they did, right? Which then just kind of made things look a little ridiculous for quite some time there. So anyways, the bottom line is this is a good situation for us in regards to the commodity index. We need that maybe to continue to come down. If that is not an issue, if GSE continues to come down, then likely inflation is not going to be a problem for us in 2024. So, which would be a beautiful, beautiful thing, okay? Now, I was looking at some of my stocks here today, right? And, I had some green ones out there. Palantir was green. Fubo was green. Obviously, SDAO was green here today. Amazon was nicely green. Meta had a good day, 1.7%. Wynn Resorts got actually upgraded here today. MGM and Wynn, and, Wynn's a huge buy. In regards to Wynn, the way I always think about Wynn stock is under $100, buy. Under $60, like screaming buy, and that rarely happens, but you can get it every once in a while for under 60. That's a screaming buy for Meta. Over 200, sell. It's pretty simple when it comes to Meta. Like, those are the prices. I always keep those prices in mind, but they did get upgraded. Obviously, Vegas is booming. Macau's now starting to boom. Like, Wynn's in a very good spot. Walgreens Boots Alliance, WBA, is starting to trade like a penny stock. This stock's all over the place all of a sudden. From my understanding, analysts came out and said some very good things about the new CEO starting there. I'm excited about that, obviously, but we'll see. It was exciting to see the last CEO come in, and she failed us big time, right? So, I don't know. We'll see. Elf Beauty was actually my best stock here today. That was up about 3.5%. 6 stocks I'm hedged against here. Toll Brothers was the one that was up, but I'm not scared about that one at all. Tesla was around break even. Apple's around break even. SDAO was obviously making us money here today. Chipotle was down here today. I hope they report bad earnings, bad comp store sales, because that would, that stock gets crushed like a souffle, as Elon Musk would put it. Polaris was the worst stock here today. That one was down 1.27%. Now, Polaris has been a hedge that's been doing tremendous for me. I've been making so much money on my Polaris hedge. They do report earnings tomorrow, okay? Now, my belief is I think Polaris is in a bad spot, right? Remember what I spoke about earlier. Big ticket purchases. Well, guess what's a big ticket purchase? Basically everything Polaris sells. All their off-road and on-road and snow vehicles and all that stuff, right? All a bunch of fun stuff that most people don't need. It's a want. And this is just a lot of stuff that boomed in 2020, 2021, right, during the Rona times, and even into the first half of 2022. I believe there's going to be a massive slowdown there, and I believe a lot of these companies are going to see their revenues go actually down. And, this is something I believe. If I look at the analyst expectations for Polaris, analysts expect EPS to go up for the company in 2024. Analysts also expect revenue to go up for the company in 2024. I don't think either of those situations are going to happen. And I think the big question is, are Polaris's revenues going to be down 5, 10, or 15% next year? I think that's the real question to me. I don't know. We'll see. We'll see how it all shakes out, and we'll see if they give us any guidance on the conference call or anything like that. But I just don't see Polaris being in a great position for this next year or two. I just don't, because rates are high. They're not going to stop being high. If the Fed starts cutting rates, it's likely because we're going into a recession, which also is not good for a company like Polaris. So I just don't see a good way out for Polaris for this next, really at least year, if not year to 2 years. So I don't know. We'll see how it all plays out. But obviously I'm hedged the way I'm hedged, right? Now, we finally got on the scoreboard here today. It was a green day for the public count, up about $10,000, and that was coming off of a horrible Friday, a horrible Thursday, a horrible Wednesday of last week. So finally eked out some green, and this is a huge week for the public count overall. And the reason being is Meta's reporting earnings on Wednesday, which Meta is the biggest position for the public count, right? Amazon is the third biggest position for the public count, and they report earnings on Thursday. So this week is really everything for the public count overall. If Meta and Amazon report some beast numbers, they'll even probably pull up Tesla as well, which is the second biggest position, because it will just kind of benefit the SP 500, benefit the Qs. But I think it's going to be a great week. I truly think it's going to be a great week for the public count. I think we're going to get back to 1.7 mil plus in this portfolio this week. We'll see, though. I could be wrong. But I think Meta's going to, I think they're going to knock it out of the ballpark. I think Amazon's going to knock it out of the ballpark. And I think, the vibes are going to go very positive this week. And obviously this week's just everything, guys. I mean, if you're only listening to the video and you're not watching it, look at your screen right there, folks. That is the, amount of earnings. And keep in mind, this is not even all the earnings. This is just a fraction of the earnings you see this week, okay? Microsoft reports tomorrow. Google McDougal reports tomorrow. Visa reports tomorrow. Coca-Cola reports tomorrow. 3M reports tomorrow. Meta reports on Wednesday. Huge, right? Amazon and Enphase and UPS report on Thursday, along with Chipotle. I mean, this is everything, folks, this week. This is massive, massive. And I'll be covering all these earnings, by the way. I'm going to probably do a 2 or 3 hour live stream tomorrow on Twitch. Same thing Wednesday, same thing Thursday. Probably 2 to 4 hour live streams every single day on Twitch for the next 3 days, because these are just huge earnings days and we're going to have so much to go over. So if you haven't followed me on Twitch, by the way, check out my description area, or you can just go to Twitch and just type in Jeremy Makes Money and follow me on there. We're probably going to hit 2,000 followers tonight. But yeah, if you want to hear my live reactions to all those earnings and earnings calls and everything like that, make sure you follow me on Twitch and enjoy that, folks. Much love as always. Appreciate y'all joining me. Thank you for being subscribed and have a great day.